Ah, I love these AI bots that record everything. Yes, hello everybody. Just to let you know, you have come to the right place. This is the Ukraine-Britain Business Council's webinar. We'll be starting in a minute as everybody and their recording bots line up.
I'm a real person. Is that a bit old-fashioned now?
Yes, it's good to be a person. I like to add up and see how many bots we have taking notes for people, but why not? It's the new way.
Yeah.
Okay. So slightly low numbers here. Hopefully one or two more sign up. Okay, just to let you know, you have reached the Ukraine-Britain Business Council's webinar with CMS Law on investing and doing business in Ukraine. I'm going to introduce the speakers while hopefully one or two more people are appearing. We have Ihor Olekhov, who's a partner, banking and finance, CMS Ukraine. And he's going to be doing the majority of the presentation, talking about the report that CMS have on 196 pages, I believe, on doing business in Ukraine. Very thorough. So this will also be available to you in the chat. We have Simon Cassey, who's Senior Vice President of Burns and Wilcox Global Solutions. You may have known him from Chesterfields, but Burns and Wilcox are the big American company that he now represents. And be hearing from him about insurance, particularly. And we have Yannis Kyriakopoulos, who's a county manager, chairman of the board of Piraeus Bank ICB in Ukraine. And Yannis is in a car because of the tube strike in London at the moment. So we hope he's going to be able to, he looks pretty good. We should be able to hear him. So without more ado, we're just quietly ticking up on the numbers here. I'd like to hand over to Ihor, who's going to talk for some time about the report that CMS have published. And again, the climate in Ukraine. It's easy to be downcast about Ukraine, but actually Ihor is very much involved with the mechanics of doing business. And there are bright spots, there are positive areas, there are difficult areas. And I think this is pretty much the chimera that's going on in Ukraine. There are certain areas of development and positivity, other areas that are more static. And I think this is a general picture we're having, but let's accentuate the positive. Ihor, over to you. Looking forward to hearing what you have to say. And just so you know, this is being recorded. Thank you.
Yes, thank you, Ashley, for the introduction. And I'm going to spend a few minutes describing actually the overall climate, business climate, investment climate in Ukraine, and in particular, our doing business and investing guide in Ukraine, which we have published for over 6 years now. And each year we are doing actually an update of this guide and provide very useful updates on the opportunities and in various sectors that this guide addresses. Obviously, because we are an international law firm, we are focusing on the issues which each international business is encountering in Ukraine while investing in doing business in Ukraine, and focusing on the particular changes which have occurred during the last 12 months and which, in our opinion, can actually contribute to development of many sectors of Ukraine's economy. Here you can actually download our guide, which, as Ashley mentioned, has nearly 200 pages, and it includes analysis of various sectors of Ukrainian economy, actually 25 different sectors and industries. And we hope it will provide a clearer picture of what is going on in Ukraine in spite of the daily reports of the hostilities and war in Ukraine and various attacks which are happening with missiles and drones in Ukraine. However, Ukraine is a large country, the same size as France, and so war is not happening all over the place, and there are many places in which businesses continue to develop. The country is still working as usual in terms of business, and surprisingly, many sectors like banking, like agriculture, they continue to grow even during the wartime. And in our report, we're actually covering those sectors and highlight opportunities which each of you can actually use to expand into Ukraine, and to not to wait until the war is over or ceasefire happens, because then everybody will be in the country. Now is probably the right time to think about opportunities, to think about Ukraine, and generally to invest into Ukraine. However, what happened during the last 12 months in terms of business environment? In business environment, we have seen that the government started to actually think very actively how to attract new investment projects into various sectors of the economy, irrespective of the fact that the war is ongoing. And this has resulted in some very dramatic changes in the business environment, and in the adoption of legislation which we have waited for sometimes for 10, for 15 years, like this concessions law, for example. We used to have this law which had a very limited scope and which was operational for over 15 years, and there were only 2 concessions made in the country for the last 15 years. And now, because of this intention of the government to develop new sectors, the new law was passed, concessions law, which now expands to transport, energy, utilities, healthcare, education, and even digital infrastructure. And the law will basically change the whole concept of how concessions are done in Ukraine. And there is a strong willingness to give a lot of these sectors to concessions to private investors, and to establish well-functioning business here. The procedures for concessions were streamlined, and in fact, we have never seen such a speedy change in this area, which has happened this summer. I will not stop on describing how this is going to happen, because you can, of course, read it in our guide. But in addition to this concessions law, as I mentioned, we also have a new PPP law, which is also passed on the same day by the Ukrainian parliament, and which in fact was very much expected for a very long time, because public-private partnerships is the way forward for the reconstruction and rebuilding of Ukraine. And this law, it will effectively permit foreign investors and foreign stakeholders to have partnerships with local authorities, with the state of Ukraine in various sectors, and to use blended finance mechanisms, or hybrid finance, how it is called, to actually start Ukraine's reconstruction. And the framework is already there. There are a number of tax benefits which this law provides, and more importantly, unlike previously, actually this PPP law provides opportunities to develop not only larger projects, but also smaller projects. Projects which are which have the value of like 5 million or less, they will also be covered by this PPP law. And obviously the main feature of this law, that all the permits and approvals, they are now subject to very expedited procedures, which normally took several years actually to be concluded. Now they take much less time under this new law. And this extends to housing, to hospitals, and even to large state-owned enterprises like Ukrzaliznytsia for expansion of rail services and rail stock in Ukraine, for Ukrenergo, the energy grid company. So all of these companies can now use PPP law to actually expand their partnerships with foreign partners. Again, I will not stop in detail to describe how this law will operate. If you are interested, you can always check our guide on investing and doing business. But what is important is to keep in mind that the sectors which PPP now covers, they include transport, energy, utilities, health, education, housing, and even cybersecurity and digital infrastructure. So these sectors were never covered by PPP law. And I believe that within a year, we will see a lot of projects in these sectors which will be popping up everywhere throughout Ukraine. Because such opportunities, they are not found in large European countries. And this is a unique opportunity to become the first investors in this sector. Another area which is very hot these days, unfortunately very hot because Ukraine is actually conducting a war of survival against Russia, which attacked Ukraine. But this has forced Ukraine to develop cutting-edge military technologies and cutting-edge defense technologies. We have seen that quite a lot of big international players have started to enter Ukrainian defense sector market and started to open representative offices first, and now in the fourth year of Ukraine's war, they have already started to construct production facilities in Ukraine, and not only for support of Ukrainian army, but also to set up R&D centers in Ukraine, because some of the technologies which are tested on the battlefield, they are immediately passed to the engineers, and that's why Ukrainian army has actually the competitive edge these days in many of these technologies, and these are shared with the defense contractors. Also, quite significant in this respect is the sector of demining, because the Ukrainian territories which were under Russian occupation after Russia attacked were to a large extent contaminated with mines of various sorts, and demining actually needs are very significant, and there are many businesses which are starting their operations in Ukraine to focus primarily on demining. Obviously, the defense and security sector is quite a complicated sector, and there are a lot of multiple counterparties which are involved here, and you need to be quite careful how to deal with them, because they are subject to very strict procurement rules, to some special rules which operate during martial law. But at the same time, for many international companies, this market has already opened, and it will continue to develop, because you see that Ukraine spent $6 billion last year for the national defense, just for the procurement of various types of equipment and material for the army. And these amounts, they are growing with each year. Plus, these are in addition to the aid and military assistance which Ukraine receives from other countries. So again, for the last year, the whole budget for this was nearly $7 billion, and again, the budget needs, they are increasing each year because the war continues, and Ukraine actually prioritizes spending for military for military needs. And so there are quite a lot of opportunities in these sectors. Again, I will not stop to provide more details on this. If you're interested, you can always check our guide, or please feel free to write me, because this public procurement for military projects has some very detailed specifics, and this needs to be taken into account, but they are not impossible, and many businesses we see in the defense sector, they are quite successful. Also important that Ukraine gradually starts to ease the restrictions for the exports of military and dual purpose goods. These were prohibited because of the war. However, now the government is basically trying to make this sector export oriented and attractive for international businesses. And it's only a question of time when these new military technologies, which are tested in the battlefields in Ukraine, they will be exported to other armies in the world. And obviously, we have seen quite a lot of joint ventures which are now set up in the military sector, and have worked on a number of such transactions. And from the structural standpoint, it is also important to remember that Ukrainian rules now permit to choose foreign law and foreign arbitration for such contracts, which was never the case in the past. And so this was an additional incentive for such joint ventures in the military and defense sectors to develop and to actually to develop and to develop this sector and to make it the leader of Ukrainian economy. In terms of other sectors which are quite hot and I would say worth addressing is the war risk insurance mechanisms, on which Simon is going to speak later. But on this slide, I'm showing some of the available mechanisms with MIGA, with DFC, and with some of the export credit agencies, which are, even during the wartime, they are prepared to provide war risk insurance and political risk insurance to businesses which are operational in Ukraine. There are, of course, some challenges, but at the same time, there are some risks which are insured and which can basically protect foreign investor against risks which are on the ground within Ukraine. And some of the words for the sector for which I am responsible on a daily basis, for banking and financial services. It's very important to bear in mind that in spite of the war, the banking sector continues to function well and continues to be profitable, and continues to actually change in line with the European rules and with adoption of Basel III requirements. Ukraine luckily shifted a lot of technologies to the cloud when the war started, and actually the results of the banking reform which we had in 2015 made Ukrainian banking sector very resilient to such crises as the war. And so far, the banking sector has survived, I would say, with not very big consequences for the overall system, and continued to function even when there were direct attacks on Kiev during the first days of the war, and now it has become even more resilient. Also, we are seeing now that the banking system is shifting gradually to open banking, implementing a lot of new requirements which are in the Second Payment Services Directive. We see also that this experience of using cloud services has resulted in the fact that Now NBU adopted new rules for cloud services, which happened actually last week. We also see that the area of factoring and trade finance is very actively developing, and also surprisingly, the amount of non-performing loans in the system of Ukrainian banks is gradually reducing. The biggest topic, of course, remains for any business which operates in Ukraine is currency control limitations, because although it is quite easy to send money and send investments into Ukraine, it's quite a challenge sometimes to repatriate profits and to take the money outside of Ukraine. But even with some of the restrictions in place, which were introduced with the start of the war, there are a number of exemptions for international financial institutions, for ECAs, and for state-owned banks, which can actually be used when structuring investments to actually be able to repatriate profits outside of Ukraine. And obviously, the National Bank, as a regulator, understands that all these restrictions for foreign currency, for purchase and transfer foreign currency outside of Ukraine, these are only temporary, because once the war is over, all of these restrictions will be lifted quite soon, and foreign investors will be able to take their funds outside of Ukraine. However, this needs to be always remembered, that because of these foreign exchange and currency rules, any kind of transaction which is planned in Ukraine needs to take them into account. As a result of the war, obviously the share of state ownership in the banking sector has increased, and now there is a discussion and the process to start the privatization of state-owned banks, which will happen sooner or later, especially for those latest banks which are very well prepared to be privatized, like Sensbank or Ukrgazbank. And I expect that either the process will actually start before the war is over, but it will probably be completed once there is a ceasefire or peace. But this sector of banking sector will be one of the beneficiaries of reconstruction, and probably Yannis is going to tell more about that. So I don't want to focus to continue more on the presentation, because we have quite a lot of reading to do in our guide, and probably we shift to the other speakers.
Ihor, thank you very much. If I could just ask you, in a conversation earlier, you were mentioning that the area for some positivity is that a lot of local clients are doubling down on their investment in certain areas. Could you expand on that a bit?
Yes, this is what we see as a tendency during the war, that new investors are actually afraid to enter the market, especially in some classical traditional sectors, but actually the existing players, local and international ones, they are using the opportunities of war to expand. And they get the financing from international banks, from local banks. They are now, we have seen that several international companies have expanded in Western Ukraine and have built new factories, have acquired land there. And actually, the war was not really stopping them, but actually promoting them to expand, because they see now opportunities which they have never seen in the past. Similarly, local companies are investing heavily now into the energy generation, especially renewables, in energy storage sectors. And again, these sectors were kind of closed before the war, because Ukraine had a huge legacy of Soviet generating capacities in electricity in other sectors. Now all of this was destroyed, and there is a huge demand in this sector, and local businesses, they are using this time as an opportunity to expand into these areas, which they never had this opportunity in the past.
Thank you. There's quite a good saying says that never waste a good crisis, because what Ukraine's doing is modernizing, getting ready for EU accession, ensuring the banks are up to speed, capital markets are good, and sounds like people are preparing for better times, and they're obviously going to be the ones that will inherit this. Talking of which, if I could shift to Yannis now, Kyriakopoulos from Piraeus Bank, who has been journeying through London, through the strike-bound London, to I think his office. Yannis, there was talk of privatization of state banks. I mean, to be honest, what's your view of that, and would you be buying into some of them?
Hello to everybody. Well, I think banks is the last one at the moment. They're quite healthy. The NBU, the central bank, had recently performed asset reviews and stress tests. And I have to say that they just confirmed the very, very good state of the banking sector. That is, they tested about 36 banks, the 20 of them, both for stress testing and for assets review, and who actually have the 91% command of the sector. And both of them tests were very successful. So I think that the banking sector will come into play after the end of the war, or just before, when there is some view from the investors. I think that it's too early days. I think there is a big gap in the valuations of what the government would expect and what the investors would like actually to chip in. So I think that overall the situation in the country is might get worse before it gets better. But still, having said that, and that's because of the war and the war situation, what is happening. But there are sectors that are thriving. That is defense, possibly logistics. Infrastructure is quite heavy in terms of investment, so I don't think that it is something that investors actually are looking at. Funnily enough, what Igor said about the Greek company, yes, and I think that is what makes sense. It makes sense for very large projects, large-scale projects, where they are supported by governments. They are actually referring to critical sectors of the economy, that is energy. Whether it is infrastructure may end up actually in some projects, retail projects, that might be the case as well, as we know. So defense definitely is the most sacred one. And I'm saying sacred because obviously the Ukrainians have developed a cutting-edge technology and everybody is after that. So I don't think they're actually eager to sell it out to the public. So that is also a time gap there that we see. We see the very big interest from the Americans and the sovereign as well regarding the drones and everything that is revolving around this. Obviously, the 800 billion of Europe that they have committed, whether it is the rearm or the Save Europe, is definitely something that is involving Ukraine in a very large scale, because I don't think that many of these projects would be able actually to realize if Ukraine companies and Ukraine people are not involved, Ukraine entrepreneurs. So there is a lot of money there. There is not much people there in companies in the sense that they are agnostic. They're not there yet. There's very few people, and the banks as well, that actually don't know about this yet. Some of us do not have even the policy to step into the game and pass the money from the supranationals to the entrepreneurs. We'll have to find the tools to assess all these projects. Well, Piraeus Bank have changed the policy. So Piraeus Bank actually has allowed, and I'm sure that some of the other banks as well are allowing to finance dual use purpose tools like drones. So I think that in general, overall, we cannot expect that many investors will come in. They have to be very specific in terms of what they're choosing. Defense, definitely. And in terms of geography, it has to be in the west of Ukraine. These are things that everybody knows anyway. It's not anything secret. And I'm expecting from Simon to hear about his view on the risk insurance, because obviously, had there been a product that actually would insure certain risks, not all of them, but certain risks, obviously the situation for the investors will be much, much better. Today, as we speak, we don't have that. The banks do finance, and we finance because we have been allocated certain funds, actually guarantees from the supranationals, the IFIs, for sectors like energy, agriculture, logistics, anything that has to do with food security, anything that has to do with energy, which is also connected to the food security, for safe corridors, actually to be able to transport these things, as the ports are still, although they're functioning perfectly, they're still under the threat of something going on, as it happened about a year ago. So that's what it is, the very big picture, and very, rough assessment.
Thank you, Yannis. For you, for Piraeus Bank, what would you like more of in the short term?
We are investing, actually, but it's much easier for somebody who is local and has already committed for the presence there to invest and do business, rather than actually who is an outsider. We've seen that in many instances last year with Nestle, with Bayer, with Jusk. They have built up factories of 60 million each. But they have been there for decades, so they know the market. They can actually smell what the consumer wants, the product they have to design for, actually to make sure that they're in the right time, in the right place, for the right taste. So it's not easy for an outsider to come in, even if he has a partner. Quite actually, even that is very difficult at the moment. So the moment that you don't know what is going to happen, what is the next stop, and you think that the worst is not over, I don't see a lot of flows apart from the defense, as I said.
Thank you. Someone mentioned earlier that there are a lot of asset managers moving into Kyiv.
A lot of
asset managers moving into Kyiv. Maybe, Ihor, you might want to note that. So the money is sitting there waiting.
The money, well, they're still searching. They want to understand. I think it's a bit of a reconnaissance. On the other hand, you see Dragon Capital have announced the setting up of two funds, one of 200 and one of 350. The one is for SMEs and the other is for infrastructure. Obviously, they have to find the money. It's there will be the managers. They will have to draft a pipeline that actually makes sense. It's quite appealing to potential investors. And if this happens, obviously you will see some of projects actually happening. But until then, there is time lag. There is time to wait.
Thank you. Now, finally, Simon Cassey of Burns and Wilcox, are you here?
I am here. Can you hear me?
Yes, we've been talking about things like insurance risk, particularly Ihor has. So over to you. What's your view of the climate and what the opportunities are, and again, where the obstructions might be?
Indeed. A lot of people over the last year or two have been very disappointed, a lot of investors very disappointed in the response from the insurance market. It's actually not all bad news, but no doubt that the insurance and reinsurance market has not been prepared to extend its capital into the war risks on land. We've seen a lot more activity in those insurances for items that move, such as vessels, cargo, people. But just before we go on that, I wonder whether maybe I could just quickly explain a little bit more about the demands of the insurance world in terms of the differences between the external requirement of insurance and/or reinsurance and the internal investors, because the World Bank and the EBRD and other bank consortia have different criteria for insurance requirements than the internal market, being the insurers who are much more interested, incidentally, there are about 10 of them, much more interested in being able to reinsure their property schedules that they have been writing for many years, but reinsuring them for war. But both the external and the internal requirement depends a lot on the reinsurance market. And sadly, for most of the risks, for land-based risks, those risks are essentially uninsurable, other than those that perhaps might be self-insured on the basis that Yannis and Ihor were explaining earlier. When you have an uninsurable risk, you have to rely on an example such as the pool re, which is a taxpayer-backed scheme for the uninsurable risk, and it's a model for the uninsurability of land-based war risk in Ukraine. So the disappointment is largely because the reinsurance market just is not ready for the huge demand of both internal and external reinsurance. There are about 3 or 4 brokers in the market who are quite active here. We have Marsh, Aon, Willis, and McGill's. I think probably the nearest that we have to satisfying the requirement is McGill's Lloyd's product, which, whilst very commendable, doesn't really touch the huge asset requirement for rebuilding Ukraine or for investing. It's a small $2.5 million limit with perhaps a maximum of $10 to $50 million. So there hasn't really been the response from the London market that the investors want. And I think we must bear in mind that reinsurance is not some kind of charity to indemnify uninsurable risks. The sad truth is that the reinsurance market is looking to profit. It's not actually there to just simply write risks that they're going to lose money on. So, as I say, it's not entirely bad news in that there is a very active war insurance market for vessels in and out of Odessa. We have a very active market for cargoes coming in and out of Western Europe, and a lot of people. There are tens of thousands of people insured for moving in and out of Ukraine, and those insurances will indeed help with the investment activity. But for the future, I'm afraid we have to go back to what we were saying earlier, and that is that we have to wait for some kind of peace agreement, some kind of ceasefire before insurers will even contemplate the risks that they will be faced with. So not all depressing, but it is not as responsive to the banking investors, EBRDs and World Banks that perhaps we would want.
Thank you, Simon. I think you were characterizing it earlier as things that move, you can insure.
Indeed, yeah. There you are. Ships, people. Go on, sorry.
And things that don't move are much harder to insure. Is it as simple as that at the moment?
Yeah, yeah. It was, just as a little note, as a matter of fact, until the Spanish Civil War, insurers were quite happy to insure property on land that didn't move. But it was when Adolf Hitler lent the Luftwaffe to Franco, and for the first time in man's history, it destroyed an entire city called Guernica. And it was that point where the war insurers, property insurers suddenly realized that we actually had the capability of destroying a lot of property in a very short period of time.
So I'm going to ask all of you, the three speakers, to maybe just summarize the position. From my point, what I can glean is that if you're in Ukraine and you're working there and you're preparing well, the opportunities are looking fairly good for people that know the market, that are there and are already investing. If you're an outsider, it's a much tougher position, A, to insure, and B, to know where to invest. But having said that, I think Ihor gave the sense that things are quietly getting better in certain areas. Ihor, would you like to summarize your thoughts or share any other thoughts you have?
Yeah, I would say that now is the time. Of course, we don't have, a very rosy environment in Ukraine because of the ongoing war in Ukraine and because of there is no end in sight. If you read the latest reports and analytics, but the war may end any day. As it started immediately, it can end immediately. And if you are not in the market, and if you are not, or if you don't know how the market operates, you are losing a lot of opportunities. So you have to essentially assess these opportunities now, even before the war has ended, to be able to capitalize on those opportunities. Of course, the local businesses or international businesses which are already there, they know and feel how to capitalize on these opportunities now, because there are many things like land, like industrial buildings, like certain concessions, which I mentioned, certain PPPs in various sectors, and these opportunities, they never existed before the war. And if you look at the similar sectors in neighboring countries like Poland, for example, they have started to develop these sectors only after like 20 years of their independence, because it didn't know how to change the rules. And Ukraine has already changed those rules because of the war. It has no other choice but to change quickly and immediately. And this, I think, is a factor which will make Ukraine successful, that Ukraine actually changes quickly with the war, and it will capitalize on this initiative from local businesses, from international businesses, and it's a very much open country, which is open to any changes, to any investments. And in our latest, slightly nationalistic world globally, I would say it's a rare opportunity to find a country which will be actually open to new investments, new opportunities, and embrace every opportunity possible to develop and reconstruct.
Thank you, Ihor. That's very positive. Yannis, you're obviously the man that's going to be there to receive these people.
100%. I fully agree with Igor. I mean, this is obvious, and everybody knows about it, about the missed opportunity in case actually the war is over. Somebody has to pay the premium for that. As I said, this is not for everybody. Now, this is only for large companies. It is the PPP. It is for projects that are supported by Ukraine government and also by the host country or the EU. Or United States of America. So we're talking about large projects, possibly with the right element of insurance as well, structured solutions rather than actually for the average man, for the normal man who actually wants to come and buy an apartment. I'm just simplifying things, for small trades. So that is not the game for sure. And it's not the game because also you have to realize that there is a situation where you cannot find people to work. So this is another impediment, and therefore that is why it makes sense for the large ones, where the government actually will definitely exempt, or it is for critical projects, and therefore actually there will be a window for this. Now, regarding, because Igor mentioned land, we see a lot of industrial parks now being set up, and there are a lot of incentives. We're still waiting for the land market to be liberalized in terms, for agricultural purposes. It is not open to the foreign investors. I hope this will change. Igor knows more about it, I'm sure. Regarding the opportunity after the war, I can tell you about the banking sector, and of course for the potential borrowers. In February this year, I think that the certified damages to the public sector were $496 billion, excluding the private sector. Since then, I mean, there's a lot of bombing that has happened, and I'm sure the damages have increased dramatically. I'm sure that the number is not less than $1 trillion. $1 trillion, even if you discount it by 50% over a period of 10 years, it means, a lot of money that would require leverage and equity. So for the banks, it means that, and this is again not for everybody, because the equity, when you want to participate in a game where the whole banking sector of Ukraine is less than the balance sheet of Piraeus Bank, for example, which is not the biggest bank in Europe. I think it's around 60 billion overall, 65 billion. The whole banking market with 61 participants, you can understand that they cannot actually play the game, the 61 banks. And if they need to give loans for the next 5 years after the end of the war, to the tune of something like 150 billion, that's 3 times, 4 times the size of the current sector. It means that would require also a big amount of equity, and the equity would be many, many billions in order to participate in the game of taking the money from the IFIs, the wholesale money, because the deposits is only 40 billion, and you need $1 trillion to build up the country. So it is the wholesale money that actually will help by leveraging the economy, and you will need a 10 or 20% for the equity. So if you make the maths, this is big amounts of money. It's hundreds of billions required both for leverage and equity. So I would say that it is for the very large institutions, the very large funds, the very large banks, and the small ones will have to either sell or participate in very niche segments of the market. That's what I see.
Thank you, Yannis. Very interesting. I mean, of course, Russia might need some reconstruction as well. So there'll be a lot of competition for finance.
I can tell you that. I can tell you that actually what you may see is that if Europe doesn't do that well and the war is over, and this unfortunate coincidence, Ukraine might become actually the jewel, and that will make much easier for the money flow and the business people and the resources to start moving to Ukraine much faster than otherwise would have been.
Yes, we'll watch this space. Thank you very much. Simon, finally, we're talking the big money is starting to play here, and I think probably the same is true of insurance.
Yeah, sure. The solution, in my view, actually, is to seek a similar model to the pool re practice in those 26 wealthy countries that underwrite uninsurable risks. And that is that the European governments, the bank consortia, the EBRD, the World Bank, have to establish a capital pool that is big enough to deal with the potential losses, and which will encourage the reinsurance market to reinsure that pool. It has to be a large amount of money. It doesn't have to be, as it were, anything but guaranteed. It doesn't have to be passed over. But this is a common solution to an uninsurable or unknown risk. And I believe that the fund needs to be perhaps well in excess of $1 trillion. It doesn't have to be, as I said, it doesn't have to be passed over, but that's what the reinsurance market needs to encourage it to underwrite in Ukraine, and would also encourage those insurers who in Ukraine, those 10 insurers who are underfunded and actually don't have good credit ratings, to the extent that reinsurers are not that prepared to allocate valuable capital they have to reinsuring those Ukrainian insurance companies. That, I think, would be the solution, a big step forward, and would encourage investment into Ukraine. This is not. I'm not inventing anything here. It is a common solution, as I said, where normally governments provide this capital base, but the Ukraine government doesn't have the resource, the money. It's spending money elsewhere. But if the investors want to get into Ukraine, then this is the solution to it.
Sorry to take this a stage further, but Yannis is talking about maybe £1 billion required for the banks.
No, not enough.
£1 billion. I mean, there's £2 trillion required here.
Yeah.
Which countries can actually step up? Are we talking about Saudi Arabia, America, EU as a bloc? China? Who's got that kind of debt?
Well, certainly not China, Russia, or North Korea. But no, I don't think there's any need to focus on which countries, other than those countries that are interested in investing in Ukraine. We know that the US is interested. We know that many European countries are, but we have bank consortia. We have ways of raising money in the world, and this money doesn't necessarily, as I said earlier, have to be. It doesn't have to be anything but a guarantee. We can kick it off with the 300-odd billion that are being held in all the world's banks right now of Russian money, but that's not enough. But it is not an insurmountable problem. This it's a model that's been used countless times in the past to provide encouragement for reinsurers to be more bold in providing reinsurance capacity to those internal and external requirements that I was speaking about earlier.
And who's going to lead this, Simon?
I would think probably the US, maybe Brussels. I think probably between the two of them.
Thank you very much. I think that's, I've probably asked enough questions. I'd like to thank the panelists for their great wisdom and their insight and their time in sharing this with us. Ihor Olekhov, thank you so much for your long input at the beginning and thorough analysis of the situation. Your report is available. We will be sharing it back. It's also in the chat if anyone would like to download it and read it. Ihor, anything you'd like to say before you go?
Well, thanks everyone for participation. Obviously, we will share the presentation and the report. Feel free always to drop me an email or give a call if you need some explanations of the report, because it's over 200 pages. So obviously we were not able to cover everything now, but we have a team of 50 lawyers in Kiev who will be able to help with that.
Thank you, Ihor. Yannis, thank you very much for coming and for your insights in the capital markets and banking. Anything you'd like to say at all before we say goodbye to you?
No, thank you for having us, all of us, Ashley. As Igor said, we're here to answer questions. Who can be a sounding board, concierge or whatever. So anybody who wants to ask something without coming to Ukraine, we're here.
Thank you very much. And Simon, finally from you.
Yes, I think from the insurance point of view, I think it's pretty important that we get as many Lloyd's war insurers, be they marine or non-marine, to come on the UBBC trip to Kiev on the 1st of November. And thank you very much for listening to me. And I've enjoyed it enormously. Thank you, Ashley.
Thank you. And thank you, everybody, for listening in. Feel free to share this widely once we share it back to you and through our newsletter. If anyone's interested in joining UBBC, we're very happy to have extra members. As Simon said, we have got a trip planned. I can't go into too much detail on that. But thank you all very much indeed, and be in touch on the next webinar, if not before. Thank you very much, everybody. Goodbye.
Bye.
Thank you. Bye.